If you can be good at taking the L and studying your trades and learning how to let small losses stay small and hunt to figure out how to improve your system and take less losses over time and get better at growing your strategies so that you manage them even more effectively, then you can trade for decades. You have the room and capital to let it grow, let your skill grow, let your expertise grow, let your understanding and your strategies grow. And so it's actually a key component to being a lifelong trader if that is what you would like to do. Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1, for starting your day with calm intention. 1, to stay centered while you trade. And 1, to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description. Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Welcome back to Market Mamas. My name is Becky and I'm the host, and I really just wanted to talk about the subject that I think we all kind of understand, but it's harder to do than I wish it was, and that is taking the L, right? Taking the loss in your trading day. So we all want to win, right? We all want to come to the market, execute on our A+ strategies, lock in green, and have a beautiful rest of our day. Feel strong, maybe take a second trade. That is another great setup. That's an ideal trading session. I could not agree more. But it's not going to happen every day just that beautifully. It's just not. And I think taking the loss does not mean that you failed. Instead, that means you're executing a professional system, right? So I just want to spend a minute today and reframe that whole conversation around taking an L, what it means, how we can do with it better, and, live our best trading lives and recognize that sometimes a protective stop is just the cost of doing business, right? I think I want to think about a loss being a designed outcome, not an accident. It's not a flaw. It's the cost of doing business. It's something you have to practice and have to be good at. It needs to be a skill within your business, a way that you're managing your system for the best outcomes. I think if you can't conceptually really get behind the fact that if your system doesn't include losses, it's not a real strategy. It's not a holistic strategy that is a business-minded approach to the cost of doing business as a trader. There's going to be some hits to your account because in order to execute a trade, you have to put risk on, right? I think that when you really get into your system, as the years build in your trading career, you develop it, right? You figure out what your setups are, where your risk would be for each entry, what a stop risk would be for said trade. And so in that situation, your stop has a known loss rate. An expected potential outcome is going to be the probability that sometimes those trades don't hit. And if you can really dig into your stats and get that probability rate for your system, you can find, maybe it has a 60% win rate. In that situation, guys, you're going to have to take the L 40% of the time. And that's a good win, successful trading system, I would argue. If you have a 60% win rate and at least a 1-to-1 profit target, ideally more so than that, that's a profitable system. And in that profitable system, you're taking the L 40% of the time. And I think a big emotional trigger for us, myself included, especially, and I'm shining the light on that and trying to do my best to not let it get to me, is not feeling emotional when a stop loss gets hit. When your account goes a little bit red, that's a day in the life, right? Stops aren't happening because you're wrong necessarily. It more so happens when the probability plays out. Say you're talking about that 60% win rate, right? When that just happens in your day and the 40% hits that you're not trading, it doesn't mean that you're like a bad trader. It means that's a probability outcome. And that was what happened with this trade. It's an opportunity, right, to study it, to figure out why this particular one didn't work. Is there something you can modify in your system? Is there something that you missed that maybe next time you want to try and catch sooner? So it's definitely like information. It can shore you up. It can help you adjust your strategy as needed, help you maybe be stronger moving forward. But it's not a thing to be like negative or bummed about if we can, you're human, right? We're all human. There's emotions behind things and it's not the dream outcome. But if we can slow down and recognize that probabilities, man. A stop out doesn't mean the setup was bad necessarily. Could be it was your A+ setup. Not every one of those is going to work out, though. There are other factors at play sometimes, and you can't always be right. More so, it means that setup resolved on the losing side of the distribution of your probabilities, right? 40% loss, 60% win. In that distribution, this was one of the other days, but could still be a killer setup. I mean, a lot of traders would be very happy with a consistent 60% win rate because you can work your leverage around that and really do well. And so I think desiring a trade that never goes red, that's not really a trading system. That's more so hoping and crossing your fingers and wanting to always be right, which is this market is always right. We are just within her game, So I think thinking about it that way is really ideal. Okay, so how can we also reframe them so that we feel good about it, right? I think that small losses are the fee that you pay in order to stay solvent, in order to stay active, in order to have an account that lives and can be traded day over day. I would argue, strongly that accounts don't get blown by stop losses getting hit. They just don't. They don't get blown by that 40% of your probabilities that is a negative outcome. They get blown when you ignore stops, or when you leverage too high and you're taking an unoutsized risk for your account size. So a stop loss will not kill your account. That should not be the situation unless you're in a drawdown and this is like the 10th or something. But in general, a stop loss is a positive expected outcome, a neutral expected outcome of your trading system. It's not a bad thing. It's an insurance policy, not like a painful insult to your credibility as a trader. It's the insurance of protecting your account, of paying a fee in order to keep your account stable so that you have an account to trade day over day. You are using that to protect yourself from massive losses. You pay homeowners insurance, right? And if a giant storm comes in and rips your roof off, like you're going to pay the deductible, but you're not going to pay the full cost of a brand new roof and structural support in your level, So stop losses like that are like an insurance policy for your account. It's a way of you paying to stay safe and managed. I think by keeping losses small, you also preserve not only your account, but your sanity. If your account takes a small loss and you stop trading, you settle yourself down, you do something else with your day, you recognize that trade didn't work. Later on, you study it, make notes, figure out if there's anything you needed to learn, ask your mentor about it, and trade your best setup the next day. That is a strong business approach to trading. They also will prevent you from making poor decisions. If you don't take your stop, if the trade's going against you, you pull your stop, or heaven forbid, you make your position bigger when it's red and then adjust your stop deeper for that. You get into a deeper hole. That's going to make it so much harder to make smart, logical decisions because you're activating your fight or flight. Your nervous system is firing on many more cylinders, and you will end up taking on more risk, trading emotionally, trading to get better, to get out of a drawdown instead of making the smart choice for the data that is printing because your whole system starts to heighten. And so if you can take a small stop at the appropriate place that you decided based on your setup, you get to keep that strong decision-making, that ability to focus and make your best choices moving forward. So again, you preserve your literal capital, your emotional capital, and your decision-making ability by honoring that system. It gets just so much stronger, allows you to trade the next day, right? It allows your account to stay stable. The goal as traders is not really to avoid trades that go red, but to avoid the big blowouts. And that's what a protective stop does. That's what taking the L does. When you have to do it, you keep it minimal. That way you get to be a trader for decades to come because you are able to let that happen and still be okay through it. I think there's an emotional resistance to taking a loss because it can impact the way we feel about ourselves, about our identity, about who we are as a person, how we're progressing as a trader. Sometimes taking a stop can feel like rejection or being wrong or a wasted effort. I mean, I live on the West Coast. I have felt this way myself. Maybe I work late on the podcast or with kids or I'm out at an event and I still get up at 5:30 in the morning. I do my practice. I'm very sleepy. I cut an hour or two of sleep, but I'm a trader and I want to see if I get a good trade. So I get up, I do my pre-market routine. I set up my charts. I have a trade plan. By 7 a.m., I'm red on the day. Like, damn it. I wish I would have slept in. You can't do that because that's not the business of trading, right? You can't only get up on the days you're going to win. There's variance in trading like this. It really is the cost of playing the game. So it may feel like wasted effort in that moment when it was a choppy day and you were wicked out and it was a pain in the butt and you just wish you'd slept in. Well, you can wish all day, but it's not going to change the game or your approach. And, maybe the next day you do sleep in because you're pissed off about the previous day. And that day you got the best setup ever and you weren't able to capitalize on it because you still had carryover frustration. So best to just not even let that thought be a part of your approach to trading because you can't change it. And you can't know in advance which days are going to end green and which days are going to end red because we're in the game of risk management. We're in the game of essentially making our best bet, studying and learning the market and figuring out the best setups and making the best bet that we can with the appropriate size that fits with our system and our accounts. That's what it is. I mean, it's proof that you are a trader. And so we have to put risk on in order to get that reward. And so each loss is not a rejection or a bad thing or wasted effort or the fact that you're not a great trader. More so it's the day, right? Traders often will move stops not to save money necessarily, not to be like, I don't want this trade to lose. I want it to give a little more room so it'll work out. I mean, that's what you tell ourselves, but it's more so to like put off the pain, to avoid the pain, the discomfort, the emotional and psychological hit of your account having a red outcome. So it's delaying pain. But if that pain hits and it's double the size of the first pain, it's not better, right? I mean, it's like choose your pain, right? Jim Rohn, the saying, discipline weighs ounces, regret weighs tons. This is that, discipline is a little bit painful in the moment to take that small hit, but regret of doubling down and deepening your stop loss, you 4x that loss in just those two moves. You double it down and then you deepen your stop, 4x that loss. So if you were trying to avoid the pain of a reasonable stop out that is a part of your system, and then you 4x that, like, ow, and I say that because I've done it and it sucked and it sucked the time, I've done it. And so I get it. And that's part of why I'm reminding myself here today with you guys too, because we got to take the L and that way we can stay alive to execute our best trades day over day, right? We want to normalize the fact that a small red trade is because we're traders. And that's pretty fucking cool. It's cool that we're traders and we get to be a part of this game and have a system with a 60% win rate is killer. I'm using that as my example today, but that's awesome. And so we want to be able to continue that long term and not blow out our accounts by not being able to deal with the 40%. You don't want to have to be living on hope and praying that it turns because you accidentally got in too big and monkeying around with your stop and being in a hoping, praying, fight or flight, pacing your room type of energy. That's not ideal. And so those things that we can tell ourselves in the moment of I just give it a little more room. And well, it makes sense that it's coming down here. I think it still could hold. I'm just going to stay. Those are in the moment you're going against your system. That's adding variance to your system that maybe you do have that good win rate, but that win rate does not hold when you monkey with it. If you change your trade, if you don't take the 40% hit, that's not the same setup as the 60% rate situation. You are changing that trade by changing how you manage it. And so the probabilities are not going to hold and they don't generally get better when you start making those choices that take on more risk. It just gets a little more dangerous and can have, sometimes it will work, right? If you've done that, you've experienced probably both sides of that, of when the next level down did hold and it did go in your direction and you were able to close that trade for a win by moving those riskier choices. That's a situation that could happen. But in doing that, it creates the ability and the choice of being able to make those more questionable choices that are not within your system. And so it's basically training yourself in a dangerous way. And I would argue that to be super careful with that because you're giving yourself an out. You're giving yourself permission to say, I've done this before and it worked. This time it'll probably work too. And so you're adjusting your system in real time emotionally versus what you've studied when you're logical and you have really dug into the candle patterns and when they present and how they work. So you want to be able to manage your trade in real time, not manage your emotions in real time. And those are different things. Managing your trade in real time as a professional trader means taking the small loss. Managing your emotions in real time because you really want this trade to work and you're starting to get into that emotional hope cycle That is not the business trader in you. That's the human in you having some feelings and letting that kind of play out on the charts. And I think that there is more risk in that. So food for thought, right? So then let's talk about some actionable strategies on what we can do in order to take the L a little bit more often and a little more reasonably, keeping our cool during those situations. And I think that the goal of this part of this and this whole conversation really is to help train ourselves how to train our nervous system to chill, to be calm, to accept the reasonable outcomes and not have to rely on willpower so much, but more so rely on your training. So if we can put little things in place where we are training ourselves to take hits, you'll do it better in real time. Your mind will consider the gray areas less because it's not a thing that you do. So we want to start rewiring our brains, this neuroplasticity that we are beautifully able to adjust the way we think about things in time with just purposefully shifting this. That's what we want to do. And that's the whole point of this conversation today. And I think all of us, almost all traders, the first few years of their career need to really think about this and do some strategies in order to navigate this better. So I would say when you're looking at your setup and you're looking at your entry, your exit, you need to think about where your targets are going to be and where your stop is going to be. Hopefully at least a 2-to-1 risk to reward. That is ideal for any strategy. So when you get in, you need to think about what your stop is and accept it before the trade really does anything. As you're thinking about entering it and as you enter it, once you've made the decision to go ahead, in your mind, you have to accept the loss. You have to say, when this trade ends, ideally I'll be green, but it's very, very real that I'm going to be $400 red, let's say. So you have to just say, in 5 minutes, I could be sitting here with a $400 loss, and that would be okay because that's the risk of doing my business. I love doing my business. I think this is a really good trade setup. If I end $400 red, I'm okay. My account is fine. That's a variance within my system. If that happens, I'm going to take a little walk. This is my approach to stop loss management, is to let my system not get heightened from this because I'm accepting it. A $400 loss and a walk away, and we'll see if something presents later that actually holds versus the stop telling me my trade at that moment was not working. That is what I'm going to do. And if we can have that quick little chat with ourselves as the trade is beginning, that acceptance will help you let it happen, right? I think also recognizing that a stop means you're a strong trader. You are following your plan, and that is a win. So any outcome means that you are trading a strong system to the best of your ability per your understanding of it, per your setup, per your logic, per your risk management. That means that you're a winning trader. And sometimes the P&L might not be green, but it doesn't mean that you're not an excelling, developing, growing, strong trader. It means that you're winning as a trader because you're honoring a system that you understand that has a positive expected return. And so I think on the heels of that, you want to develop a ritual that you do when you're stopped out. And also on the flip side of that, when you win, have something in your process that is what you like to do to stay calm, to support that neutral nervous system that helps you keep chill and stay business focused, stay focused on your best outcomes, expect that it's just a normal outcome. It's like breathing. It's like executing your trades per the system that you understand. It's like if you owned a store, it's engaging in a sale. It's letting product leave. If it's a sale, maybe you don't make a ton of money. If it's something that really is a high value item that goes really well for you to sell it, that's like a bigger win. But it's just an execution. It's an exchange within your business. So if you take a stop, what would you like to do with yourself afterwards? We're all going to be a little bit different with that, but I think that there's some arguments for stepping away from your keyboard, your screens, your charts for at least a couple minutes and letting your system, taking some deep breaths. Deep breathing is a key here too. Whether or not you choose to step away, taking some deep steadying breaths is super powerful. Just slow inhales, hold, slow exhale, and hold. That's a box breathing technique. You do it 4 count inhale, 4 count hold, 4 count exhale, and then 4 count, just hold without taking another breath. That literally slows your heart rate, slows your breathing, slows your fight or flight response, and allows you to maintain some neutrality and focus, which oftentimes we do have a moment where our emotions can heighten, especially when you take that stop. And so doing things like stepping away, doing some deep breathing, maybe you lock yourself from executing. A lot of platforms will allow a lockout button. And so that can be a choice of saying, if I hit X loss or win, I'm done trading for my day. That's my system. That's my intentions. That's where I'm at in my business career. So I want to honor that. Maybe you hit your lockout button and then you stay at your charts and you look at it and you understand it. You feel the experience, you log your trade, you journal about it. Some people like to just process it right in real time when it's still very fresh. They know exactly why they got in. Maybe that is the best time to get all your data down. Not necessarily the best time to jump right into another trade, because oftentimes you'll be a little bit heightened. And if you don't catch it in time, you can start a cascade effect of that kind of a tilt spiral if you jump back into a trade after a loss, which is what we're trying to mitigate here, of being able to take the L and letting it be a normal part of your outcome, and you don't fight. You don't fight with the market, because she is strong and we are humans. So you want to prevent the revenge trading. That is so dangerous. It's so dangerous because oftentimes you think, if I go in double the size on the next trade opportunity, I don't even have to think about the loss because I'll be green on the day. It will make up for it and put me into profit. That is revenge trading nearly always. Even if you get another good setup, don't leverage up. I mean, if you stay calm and you stay neutral and you did some breathing techniques, you waited for a little bit of data to print, and then you're like, oh, now I see. Now I understand what's going on. You did not hit your max daily loss for your trading system, and you have maybe one more shot you want to shoot at the greater opportunity. I would argue, don't leverage up. Don't try to make it back and double your win in that moment, because you're at a risk of trading more emotionally coming out of a red trade. And so maintain your appropriate leverage for your account size. And then if you are focused and you really respect the fact that it's another strong setup, take it, but take it appropriately sized. And maybe you go from negative 400 to positive 50 or negative 50 or something that is, ideal, because it was a really good setup and the market was finally ready. Like, this has happened to me where I get into a trade and I'm wicked out, and then it really does set up and the trade is finally ready at a moment down the line. If you can stay neutral and hold your own because you have expected the variance of the loss, then you do have some mental capital still, because you've been able to be more neutral. Then you can go for it, right? That's ideal. You want to be steady and practice the steadiness, basically, is what I'm saying, versus trying to figure it out in real time and deal with those emotions and that willpower in real time in the heat of the moment. And if you practice this and purposely put attention on how you're going to take your losses as a trader, it will start to become more innate, more intuitive, more natural as a part of your system, that this is just who you are as a trader, what you need to do, and that you respect that as a priority for your trading system. It gets easier because it gets, like I said, more innate. And I think that's something that we can learn from all the professional traders that came ahead of us. Professional traders don't avoid losses. They control their risk. They recognize that if the trade is going against them, something just dropped, a random tweet or whatever, there has to be stop losses in place. And you have to be able to cut your losses so that the money that you manage can withstand, so that you can still have capital when the market gets more in sync with an opportunity that you see and you excel at. And so in order to be a professional trader, you have to take the loss. You have to be an excellent taking the loss person. You have to be really good at being that risk manager in order to manage the risk for high amounts of funds. You have to be able to leverage up in order to take big hits so that you can take big wins and your accounts can sustain and people will want to put some money with your funds or what have you. And so you got to be able to take a loss, trade small. That way you can let it grow and be a long-term trader. I think the statistics for day trading are not great, that, easily 90% quit. And that's because probably you don't ever get good at taking the L. If you can be good at taking the L and studying your trades and learning how to let small losses stay small and hunt to figure out how to improve your system and take less losses over time and get better at growing your strategies so that you manage them even more effectively, then you can trade for decades. You have the room and capital to let it grow, let your skill grow, let your expertise grow, let your understanding and your strategies grow. And so it's actually a key component to being a lifelong trader, if that is what you would like to do. And so that's why it's such an important skill. Like, I really think that it's a big deal in order to get really good at trading, is this step. And so you're also going to sleep better. You're going to have more neutrality. Like, as a human, I think that this is really good for our hearts and our souls and our families and our other parts of our life, because we can be more pleasant when we don't take massive hits that just really throw us off our game, make you feel some kind of way, you're frustrated, you're edgy, you took too much of a risk and you regret it. living in those feelings on that day just suck. And they're going to impact other parts of your life and potentially your relationships and your people's experience of you. And that's not ideal either. Like that is an impact to your life and your person that should be avoided as well. And so if you're not even just doing it for your account, but do it for your mental sanity, the carryover from a fat loss versus a reasonable small loss is very different. And so in that respect too, like gotta honor those stop losses and trading the appropriate size for our accounts. That way everything can grow in a stable, reliable way. And I think when you can push that level and get to the point where you're taking the small losses and recognizing them as a normal part of the business, that's how we can progress from messy middle traders to professional traders. Which is the goal, right? Like that's where we're headed. That's what we want to do with our lives. You guys are here at this episode with me because this speaks to you, because this is who you want to be too. You get what I'm saying. And so I think it's good to just know, taking a red day doesn't say anything about me that I'm not a good trader or that I don't have a successful skill or that I'm not superhuman like other traders seem to be that looks like they're always winning. They're just traders too. And it doesn't need to mean any damn thing about you when you have a red day, other than you're a trader. And by having a small red trade, that means you're a damn good trader. It means that you respect yourself and your system and your longevity in this game. And I think that is a power move. So let's take losses with strength and power and perseverance and attention to detail and goals. And I think that is really, really a strong choice for getting our best outcomes. So I am in full support of that for all of us, for myself included. This is a lot of my episodes are little pep talks for myself too, as I am improving every day, every month, every year as a trader. These conversations help me as much as I hope that they help you. So if this episode was good, if you liked it, please leave me a comment, a thought, an opinion. Maybe you have a different opinion. I would love to hear it. Leave a comment and share this episode with a friend, because I think it's a conversation that really just helps us all stay level and remember part of our business as traders is, allowing the small losses to happen and being solid through that. Okay, everybody, thank you so much for your time today and happy trading. And let's make this the best career, because we are business professionals and excellent traders. Take care, everyone. Bye.